Hey, it's 6:02 and we've got participants joining online. So let's make a start. Firstly, I'd like to just introduce myself. My name's Stephanie Cloter and I'm the CEO here at GPEX. So welcome everyone to this important webinar on navigating the complexities of payroll tax in your general practice. Whether you're a practice manager, business owner, or responsible for the financial aspects of the medical practice, we know that understanding payroll tax is crucial. And so payroll tax is often shrouded in confusion, and we know that it's a really changing landscape at the moment in Australia. So we're really delighted to have Sarah Bartholomeusz and Brendan Campbell join us this evening to unpack this subject for us. So we'll, in this webinar, be demystifying the subject and provide you with actionable insights to ensure your practice is not only compliant, but operating efficiently. So thank you very much for joining us. But before we commence, I would like to begin by acknowledging the traditional custodians of the land on which we meet and pay respects to elders past and present. And I extend that respect to any Aboriginal and Torres Strait Islander peoples joining us here this evening. Now, tonight's webinar has been made possible by the TIP Group as sponsors, and I'm very pleased to introduce Michael Baragwant as well this evening. So our speakers are Sarah Bartholomeusz and Brendan Campbell. Sarah is the principal of ULegal and is passionate about working with medical professionals to support your efforts in making an impact in the world. With an extensive understanding of corporate and business issues, Sarah works with a range of medical professionals, usually in private practice or startups. And Sarah has also published a book entitled Growing a Medical Practice from Frustration to a High-Performance Business, which is also available on Audible. So that's an action following this webinar. Sarah is also a host of the podcast Hacking Health, which is a favourite in my car on the way to work, which highlights forward-thinking health experts, influential thought leaders, and proactive change makers united by a shared commitment to making healthcare accessible to us all. Brendan Campbell, who's joining us, is the Director of Prosperity's Business Services and Taxation Group, and he supports his clients' needs by advising on a number of business strategies and structures, taxation planning and minimisation strategies, which are always important subjects for us. Now, the format for tonight is we're having a webinar. We've got several hundred people enrolled, so we are going to keep the cameras off and keep the participants to keep yourselves on mute. But we do really encourage Q&A so that you can have your questions asked and hopefully answered. But if not, we certainly make a commitment to providing a response in the following days. So after the webinar, we will post a link to a short survey in the chat, and we ask that you do complete that. It won't take any more than 2 minutes, and your feedback is really important for us to continue to make the webinars possible, but also to address any feedback that you want to send through. And we'll send through a copy of the presentation as well over the next couple of days. Now, I think we've got a presentation to be shared as well. Let me just make sure we can get that up on screen. Okay, wonderful. And before we just start this evening, before I hand over to Sarah for the first presenter, I would just like to hand over to Brendan and Michael to say a couple of words. Michael, over to you.
Brilliant. Thanks a lot for the time and the opportunity to support this event. TIP Group is a diversified financial services business with everything from life insurance advice to wholesale investments to SMSF administration to, large-scale construction. So we like interesting and complex problems, and we like working with really intelligent people, which naturally leads us to work with lots of people like yourself. We have a wide range of clients in the medical profession, from specialists to surgeons to clinicians, and we really enjoy working with you. So we're really proud to support the event, and I think actually one of our corporate advisors is on the board here. So it's an amazing little connection, and we're really glad to support. So I hope you enjoy the content tonight, and I look forward to potentially supporting you guys in the future.
Thanks, Michael. And over to you, Sarah. Walk us through the presentation, and then we'll move on to the Q&A.
Hi, everyone. Very excited to be here tonight. I'm going to make sure I can change the slides. There we go. I can. Success. So, you know, you'd be very disappointed in hearing from a lawyer and not starting with a disclaimer. So, Brendan and I are both presenting tonight. So I should say this could say this presentation is for general guidance only. Legal and accounting advice should be taken in relation to action on specific issues, depending on who you're hearing from. So please, this is an extremely complex area, as you will soon find out.
Complex and changing, that's the problem.
Complex and changing, exactly. So this is what we're going to talk through I'm still working out how to use the slides, evidently. In the next 60 minutes, we're going to be talking about why are we here. We want you to understand the history of payroll tax and to understand how we got here. So the history of the relevant cases, and I'll try and make it as exciting and engaging as I can, because I think it is important for you to understand that background. And then in talking through that, you'll get a better sense of whether your own practice is impacted, and also the decisions that you can make around payroll tax and how that will impact on your practice, what you choose to do moving forward. And we're also going to talk through some state and territory specific guidance. So thinking about how to handle the changes in your specific state and territory, because it's different everywhere. And as Brendan said, it's an ever-changing environment at the moment. All right, there we go. Okay, so I want to get you to understand in the first instance the legal framework. The slides are being a little bit bananas because it's not straightforward, and it never has been. The way that GP practices have been engaging with doctors over many, many years has been fraught with tension in terms of employment law listed here, the Fair Work Act, awards, Tax Administration Act, superannuation guarantee, and then the independent contractors, whether or not they're genuine contractors or there's sham contracting involved. So federal laws, state laws, and the common law make this framework even more complex, and it's really the main reason why we always suggest never trying to navigate it on your own, because you don't know what you don't know in this space, and this latest case law does make it more complex. I'm going to hand over to Brendan to talk about payroll tax. What is it, Brendan, and why are we give us?
Well, thank you, Sarah. Payroll tax, it's the worst tax in my opinion, to be honest. It's a state and territory tax, which is important to note. And I'll talk about that in a little bit, but it's not federal. This is a state tax. I guess we've got a bit of history of payroll tax and where it comes from and what it's about, but really it was a tax that was brought in, and it's state-based, very important. I'm hammering on about that, but state and territory-based. It's brought in once you have taxable wages in the eyes of the state, the relevant authority within the state. Once your wages are over a certain amount, and the next slide will cover that in a few seconds, but once you're over a certain amount, they want you to pay a percentage of that as a tax to them. So it's a tax for employing people, which is why I think it is the worst tax, to be honest. It's one of those ones that if you sometimes businesses are at a precipice of making a decision, do we need to employ more people? How do we need to do this? That shouldn't be that decision shouldn't be affected by, will we pay tax to do this? And you it is effectively now, and that's actually exactly that is happening right now in the medical space. So there's been a lot of 3 years this has been going on, but it has really heated up in the last 12 months, and that is effectively what's happening. So it's important to understand it's state and territory based. It's based on where your employees are located. So you might be across multiple different sites around Australia, but if you're, there's a slide, thank you, Sarah. But if you're based, say in New South Wales, then the relevant amounts apply to you. So I'll use that as the example now. A threshold of $1.2 million. So if your taxable wages, as defined by the relevant state legislation, is more than $1.2 million, then you'll start paying payroll tax. I won't go through every nitty-gritty detail of all of these, but it's important to understand that the law behind the states, the way it was written, is pretty much the same across most states. WA's maybe a bit of an outlier now, but pretty much the same across each state. And that's because there was harmonization across the rest of the states really in 2008, where they all lined up and went, well, we're all trying to do this. We're taxing on some businesses that have got, wages in multiple states. So we'll make it all the same, so it makes it a bit easier, which is great and also negative sometimes as well. But what that also means is when there's a decision that's handed down in one state, it will also then end up affecting the other states. But the amounts that we have are all different. So while the legislation, the background's the same, the amounts are different. So, ACT, $2 million threshold, but a 6.85% rate. That's huge. Queensland, where I'm based, it's 1.3 million. It's 4.75. It's a bit more, a bit less if you're in a rural area. It actually scales from 1.3 to 5 million. Once you're over 5 million, it's the full rate. It's all over the shop. Victoria kicks in at 700,000. So they are all different, and it does make it a bit harder to understand which one you should take. But if you're in one state, then obviously that makes it easy for you. Just looking at understanding that threshold as to whether you're liable. Another important factor is it talks about wages. It's not just, what's my wages? Look on the P&L, there it is. Taxable wages they refer to, which in relation to this definition refers to wages paid, superannuation, reportable fringe benefits, and in certain situations, which is what we're talking about today, certain contractors as well can be deemed or can be considered to be wages or taxable wages according to the relevant state legislation. Another big thing that I want to just clear up at the start, because if I don't, I'm guaranteed to have at least 10 or 15 questions on this. It's a state-based definition of what is wages. If someone is a contracting doctor, which we're going to get right into that in a minute, and they're considered a relevant contract, which you'll love that term after a while, you'll hate it, I should say. If you're considered subject to payroll tax in your business because of your contracting doctors, that has no correlation and no connection at all to any federal tax system. Just because they're assessed as taxable wages in your state-based state that you're in your business does not mean that contractor is now all of a sudden annual leave, superannuation, all those other pay-as-you-go withholding. That doesn't apply. That's different. This is, and it's very important to understand, it's a state-based tax, state and territory-based tax. It is not to do with the federal system, nothing to do with income tax, penalty leave, all that sort of stuff. It's all different. So this is just a tax grab, let's call it, from the states based on how much you pay to your employees, or employees, inverted commas, under their definition of what taxable wages are. So I hope that makes sense. And yeah, those are the rates on there. We'll talk later on. I'll come back and talk a little bit later on about the different states and how they're approaching it, but maybe screen grab that, or it'll come out to you, I'm sure, in the emails, but understand which state you're in and how much it applies for you.
Brendan, I think of it as a tax on growth.
Yeah, that's right. It is.
And I think of a good example of another state-based tax is stamp duty, where you pay it to the state rather than as a federal tax. But that was a great summation. What also can be relevant if you're looking at whether or not you might be liable to pay back payroll taxes, these are the current rates and thresholds. But if you need to pay or consider if you're liable to pay in the past, there might be different rates and thresholds available. As Brendan explained, with Queensland, it's different in capital cities as rural. So there are some variations on this, but this is a good starting point for what the thresholds are.
And that's a good point, Sarah, in that, you know, as I'm sure you'll touch on probably when you're talking about Thomas Nars, I'm sure shortly, you know, they can go back 5 years. Well, in some states, up to 5 years, and that can mean significant amounts of money. So yeah, it's important to understand this isn't just a problem going forward. This can affect stuff that's already happened, because in the annoying thing, this isn't really a change in any legislation. It's just a bit of a moving of the goalposts and a change in interpretation from the legislative bodies, which is very, very frustrating.
Exactly. So I thought it might be useful to talk about how doctors are usually engaged. We know that GP registrars must be employees. Sometimes doctors are engaged as part-time or casual employees. And over the last few months, we've been doing a lot more employment agreements for doctors, I must say. That in the past, doctors have been called independent contractors. That's less popular now. The common way to describe them now is more as an independent business owner with an accredited business providing services to that doctor. How I like to describe it in an easy to understand way is maybe like it's a co-working space that provides services to you. But we all know in health, it's a lot more complex than just being a co-working space, because the services include nursing services. Often that's the reception services. It's consumables that are needed as part of the services that the GPs provide. So, and also for accreditation, that the GPs are often needed, or if it's a teaching clinic you're part of, the services can go both ways, because the GPs may need to provide services to what I'm calling a co-working space to make sure that they're part of the teaching clinic. So we're trying to simplify things, but in health, it just never seems to work out that way. All right. Now, what you've been waiting for, my summary of the cases. And I thought I'd start at the very beginning. Don't laugh, Brendan. Very exciting time for everyone to understand the background. And this case, I remember in 2019 jumping up and down about, because I could see the issue with independent contractors in our medical space. So this case is the optical superstore case. And the issue was whether or not the employer or the contractor was required to pay payroll tax. So in Victoria, know that it's essentially harmonised around Australia other than WA. So this is relevant for a large chunk of the people in our country. The features of the contract in this case were that the optometrists could work at any location. They were paid an hourly rate regardless of the level of consultation required, and the optometrist needed to ensure that services were being provided during retail hours at agreed times. The optical superstore argued that they were tenancy agreements rather than a contract for the performance of services because of the way the funds were structured. And in this case, consultation fees were paid to the practitioner. This was the return of Medicare and private consultation fees. The practitioners were charged an hourly rate for the use of the room, and the total amount was remitted back to the practitioner as a consultation fee less the room hire. However, there was also a mechanism built into the contract which guaranteed the practitioners a minimum hourly wage, regardless of the number of patients that they'd seen. And it was also a requirement that the services were being seen to be provided by the optical superstore at all times. So they wore uniforms rather than that of the individual optometrist. It was these two factors that led the court to find that optical superstores was an employer for payroll tax purposes. And you can see on this slide, I've said that most medical practices didn't worry too much about it because the facts were unlike how medical practices operate with doctors. And this is the case that broke everyone, being dramatic. But in 2021, we had this case come across the NCAT, which is a tribunal. And in NCAT, we ordinarily wouldn't be too persuaded by a tribunal case. But what happened was that Dr. Thomas appealed to the High Court on a number of grounds, and the High Court knocked them back on all the grounds that they'd applied on. So what I'm clicking through, I can click through and explain. So what this case, in this case, the court considered whether the 70% of Medicare claim that was just distributed by the medical centre to a doctor constituted wages and accordingly was subject to payroll tax. So in the Thomas and Nas case, the money went into the general practice account, and then 70% of that was dispersed to the GPs. And that is a very common way that doctors have been traditionally paid, through the account that pays the rent, the account that pays the employed staff, the account that pays for all of the hot doc and other registrations, zero registrations, all those, that same account pays for everything. And that commingling of money was one of the issues. There were also some other issues in the contract around control, including restraints and what else, Brendan? Those sorts of employment issues.
I agree. Their contracts looked a little bit, they weren't the best contracts. They looked a bit like they could be employees. And from our point of view, I know I'm definitely accounting, and I assume your point of view as well. I know when I looked at it, I got worried, and then I looked in the detail. I was like, oh, they kind of called them just about employees in the contracts. It wasn't the best example, and I thought, oh, it won't be too bad. We'll wait and see. Someone with a decent contract and good procedures in place will get challenged, and they'll likely win. Business as usual. Happy days, we move on. Because I'm pretty sure in Thomas Nas too, originally they reported their income, they recorded practice income as all the billings, and then they amended a tax return and showed it as just the service fee, which that shot an alarm bell off. Look at it. It wasn't the greatest example, and that probably, while it was concerning, sort of after looking at it for a bit, I got a bit maybe too comfortable with it. Oh, it's not too bad. We'll see how it goes. Someone with pockets will challenge it. And as you and I have talked about, Sarah, it's a bit annoying that I'd love to see the OSR take on a corporate and have a good crack at this. Someone who's actually got decent contracts and capital to have a go at them in court would be fantastic, and we'd see where this actually lies. Because at the moment, this is all case law and opinion of the OSR. OSRs are relevant bodies.
And as I said, it's a tribunal decision, not a court decision. So the fundamental issues were in relation to the payments and then being deemed as wages were whether the agreements between the centre and the doctor could be deemed as relevant contracts, which Brendan mentioned earlier, pursuant to the Payroll Tax Act. And if this was the case, whether the payments were amounts paid or payable during a financial year for or in relation to a person of work related to the agreement for the purposes of Section 35 of the Payroll Tax Act, which you hear a lot about in this case. So this case was the first one with features that are similar to most administrative service arrangements that we encounter in medical practice. Those being the various doctors operated from the medical centres, and each doctor or related entity entered into a written agreement with the administrative service entity. The administrative service entity provided rooms at its medical centre to the doctors, as well as shared administrative support and medical support services. The doctors saw patients in the medical centres. The doctors bulk billed each patient, and the patients assigned to their Medicare benefits to the doctors. The administrative service entity on behalf of the doctors made claims on Medicare, and the funds were received from Medicare into the practice account. Administrative staff employed by the administrative service entity recorded and reconciled the payments. The administrative service entity paid each doctor the amount equal to 70% of the claims paid by Medicare for that particular doctor without any deductions for tax or superannuations or otherwise. The remaining 30% was retained as the service fee.
And I'd be willing to bet of the practice owners on this webinar right now, 90% of them would have that arrangement in place right now and be saying, oh, Jesus, that's me. And that is where the issue comes into it, really. Yes, their contracts weren't great, but that process is kind of what every medical practice does.
Yeah, yes. So that's why it's been so scary.
And then it
the
was appealed, and we all thought, this is great, there's an appeal, I'll get up on the appeal.
Yeah, so then there was appeal. They appealed to the High Court and they were knocked back. These are three of the grounds that they tried to appeal on, but they rejected it on all grounds.
On that, though, interestingly, one of the appeals, one of the things they didn't look at, which was relevant and is going to be important for the flow of money later on, there was 3 doctors who actually received the money in their own bank account and it wasn't paid directly to the practice and then distributed. Those 3 doctors received the money and paid a service fee back to the practice. And the OSR decided not to actually challenge them at all. And that didn't come out till the appeal that was the case. So they didn't actually bring in all doctors, only doctors where the flow of funds was collected by the practice, which is crucial for those taking notes in a few minutes.
Yeah, and those 3 were allied health professionals, actually. So
well, not doctors, sorry, allied health.
But I don't think that matters. I think that it's the flow of funds, which we'll talk more about when we talk about each state and territory's rulings, because it doesn't matter that they weren't medical practitioners. The most important thing was the money was paid directly to them.
Which is that's why they weren't brought into this, actually, yeah.
Yes. So now's a good opportunity to not only review agreements, but also processes and procedures that are in place. And one of those things, I think Brendan alluded to it, was the way that the money that was flowing was described in the accounts. So that's why it's so useful to have Brendan here as the accountant to be able to speak to. It's not just the agreement. It's not just the way that you operate things. There's lots of different things to be thinking about. The other thing, of course, is that doctors should not be directed in any way by the medical centre. And I mentioned that earlier. We see some practices want to own the patients, for example, because they see it as a goodwill issue. And in Thomas and Nas, that was an issue of control, having to work Saturdays, having to attend meetings, all the things that you think might be no-brainers for running a business. With doctors being truly independent practitioners, it's sort of thrown this into the air a little bit.
It's a bit like that. Yeah, they have some of the clauses have in there, you can only take 4 weeks a year because it's like, well, it's kind of an employee, isn't it? That's not really an independent contractor.
Exactly.
So for anyone who's got those, to be honest, if you haven't updated your contract in the last 6 to 12 months, it is probably well out of date.
Yes, scarily. So, Brendan, I'm going to hand over to you for relevant considerations. Oh, there we go.
I thought what we'd do here is just run through where we're at now. Importantly, to understand that, I guess, as Sarah rightly mentioned, we all follow this. Let's just assume Western Australia's out of there. Touch on that now. Western Australia, government's not interested. They're not pursuing it. They're not following Thomas Nas. They're not getting involved. Every other state is kind of in this together. So when Optical Superstore, which was Victorian, we all got involved because every state's involved now. Then Thomas Nas, which was New South Wales, every other state got involved. One of the late players, interestingly, to the game, which my home state, Queensland didn't get involved till the 22nd of December last year, and they just out of nowhere, very little audit activity, out of nowhere, they just jumped in and went, here's a private ruling. They dropped it on the Friday before everyone went on Christmas for a little bit of a break, unfortunately, tried to sneak it in. It was the talk of the town for quite a few weeks over Christmas even. Well, for those in the medical industry anyway, I definitely advise a lot of medicos, so I was involved in that. And they dropped it, basically dropped the bomb and said, yep, we're following Thomas Nas, game on. And they went a little bit further and even said all medical, I'll get the term wrong, medical professionals, whatever they referred to it as. Specifically, they said GPs, specialists, dentists, allied health. And it was like, Now it's not just, Thomas Nars, which was a GP, and Optical Superstore, which is an optometrist. They're calling out dentists, they're calling out allied health, they're calling out everyone, saying you're all in this. Yep, we think they're relevant contracts. If you employ them, basically, we think you should be paying payroll tax. You're on notice. Let's go. Over the 2 weeks, over sort of Christmas, most professional businesses, not doctors like yourselves, but professionals, I guess, were being lawyers and accountants, were away. We've come back to this early January, and there's lots of conversation. For some reason, by the 22nd or 23rd or 24th or so of January, it was about then, they've come out and said, oh, there's an amnesty for GPs. And we all went, great. Oh, what about all the others? And nope, it was just GPs. That amnesty you had to sign up for by the 29th of the September, which is a few days away. They've now extended that. So if you're in Queensland, that's been extended, the amnesty period, till the 10th of November. And that amnesty runs through to the June 2025. So if you sign up, and there was a lot of angst as to whether people should or shouldn't sign up, but we'll cover as to whether you should or shouldn't in a minute. If you sign up for the amnesty, which it's worth considering, absolutely, because keep in mind they can go back 3, 4, 5 years. So if they ping you and go back 5 years, it can be a huge number. But if you sign up for the amnesty, they can't. There was a bit of if you sign up for the amnesty and your contract's shot and you're liable for payroll tax anyway, which some people would have been liable for, it's a bit like, oh, you've voluntarily given your information over. So that's the big concern that people had. They've sort of given a bit more clarity, and I guess most people are now pretty comfortable, almost professionals are comfortable saying, look, you probably should take this amnesty, particularly if you're genuinely liable. If you're going to be genuinely liable under their new interpretation, shifted goalposts, etc., that they've got, simply because you don't want to go back that many years, and they're likely going to be coming looking for you anyway. So, and I guess also there's now an end game we can work to. So they've come out even recently, just last week. It's just timely for this webinar. They came out last week with a new ruling, basically outlining situations. If you do this, this applies. If you do this, this applies. The nuts and bolts of it are, if you have a contract with, and I should say everyone's following suit here. Remember, all the states are all in this together. SA's jumped in, same sort of amnesty, pretty much written identical to the Queensland one. I think yours runs out on the 30th. So you got till the 30th of this month, which is 4 days from now. Yeah. That's coming up. So that's important for anyone in SA, which I know a lot of the viewers will be. Yours runs out on Friday. So the amnesty itself to sign up is actually pretty simple. You just sign it up and fill out a couple of forms. You don't have to submit stuff. They will then come back and ask you for more information. You then have to submit it. So you kind of want to be ready that you will have to volunteer information at some point. But the Queensland came out, and it will sort of flow through to everyone else a little bit, although I know New South Wales today said they won't be, but let's see how that goes. And they really hammered down the fact that if you're a relevant contract, and the importance of that is that will mean that you're under any standard GP arrangement with a practice that we've been talking about before, that Thomas Nars example, squeaky clean, beautiful arrangement. Even if you have that with no exclusions, you can likely still be considered a relevant contract according to the OSR. As I said, I'd love to see a corporate take them on, because I don't think it'd stand up. But in all honesty, if anyone listening here, I don't know how deep all your pockets are, but if you get challenged by the OSR, it's going to cost an absolute fortune to fight them. You don't want to be that, sacrificial canary down the coal mine. It's like, oh, can't someone else with really big pockets challenge this? But the OSRs out there, or the relevant state bodies, are really sort of tackling the medium to smaller guys. They're not going after the big fish, which is frustrating me a lot, as you can probably tell. But they've come out and said that you'll be a relevant contract where you will be, in their opinion, subject to payroll tax. They've given one exclusion, or one major exclusion. There are some little tiny ones, but major exclusion being that if you are a contracting doctor who collects the billings in your own name, then you will be excluded. They've gone further, which I think will be very much challenged by a lot of people publicly, to say that even if you had and a lot of consulting doctors have a company or a trust in place, not for streaming income, but for asset protection, for employment, for those sort of reasons. They said if you collect it in a company or a trust, then they don't believe you would be exempt. But let's see how that goes. The nuts and bolts of this ruling that's come out now, though, as of last week, fresh off the press, relevant contract. You're probably going to be subject to payroll tax according to the relevant state authorities, unless you collect those billings in your own name. So the nuts and what people are doing is you should be looking to, if you're subject to payroll tax, you're over that threshold, you should weigh up your options, talk to an accountant and a lawyer, talk to us, talk to somebody, find out what your exposure would be, look at that calculation and go, okay, it's going to cost me $5,000 a year. I can deal with that. That's fine. It's going to cost me 70 grand a year. I can't deal with that. That's not fine. So you need to then make that decision. Do I apply for that amnesty and then change all my systems where I have doctors collecting their own billings, you having really loose contracts with them that Sarah, I'm sure, will be putting together for a few people, putting together really loose contracts where you don't have control, you don't have ownership effectively over them. They collect the income and then they pay you the service fee, and you avoid payroll tax, or avoid's not the word I'm after. That's probably a bad word to use from an accounting and legal point of view. You aren't liable for payroll tax. How about that? The other option is you suck it up and bear it. Do you on charge it to your, let's call it 5%, a bit of an average of the other states. By the time you have, let's say, your 70-30 split, 70%, you're only assessed on the 70%, not all the billing. So doctor bills 100% of it, you're assessed on the 70, 5% of the 70, that's 3.5%, give or take, of your billings. Do you increase the service fee by 3.5%? Get on with it, pay the payroll tax, even though it's the worst tax in the world, as I've discussed. Get on with it and pay that payroll tax. Or do you effectively go, I don't know, increase it by 2%, take an extra 1.5% yourself and wear the hit and cost of doing business? But it's important to understand, should I do the amnesty? I would think if you're up there, and then if you've got more than 4 or 5 doctors on your contracting doctors, you probably should. And understand how much it will cost. So talk to your accountants. If they're not actively talking about it, talk to another accountant, talk to your lawyers, get great contracts in place, find out what your exposure is. You've got time. If you do this amnesty, you've got time now to get everything lined up, but do it quick and get in line early so it's ready to go. And put everything in place. New South Wales, if you're out there, you guys are getting a bit screwed in that they're not openly admitting they're going to follow Queensland's lead on it. They're basically saying, we'll just pause the audit activity for now and think about it. And they've been auditing for 3 years now. So it's been a disaster there, unfortunately. ACT have got some weird rules where they go, you won't be subject to payroll tax if the practitioner bills more than 65% bulk billing, which I don't even get how they're going to calculate that. Is that on an average of 3 years, 1 year, monthly? I don't know how they're going to calculate that. That's another wild one. But the point we're trying to make, and apologies I'm rambling on, but every state's different. Just make sure you understand, talk to someone who understands your state's specific requirements. If there's an amnesty, try jump on, try take it, and get all your ducks in a row, get some banking systems in place so you can be ready to make sure that you're not going to be liable for payroll tax, or suck it up and bear it because it's coming. That's a bad way to finish, isn't it, Sarah? For my part.
Not at all. I think there's only, I guess, that we don't actually know what a future case on this is going to look like. We are, because it's changing so much and a moving beast, we can only give you the best advice from the information that we have at the time. And so there's no lawyer or accountant that can tell you any particular way will be foolproof. Other than employing your doctors and accounting for payroll tax, or having that control and accounting for it. So that's probably what I would say about that. They're certain. Other than that, it is a bit of a moving feast. With WA, we do know that WA Office of the State Revenue have in the past been regularly auditing for that independent contractor versus employee issue. They've said they're not pursuing it now, but we know they've done it a lot in the past before Thomas and Nas. So don't think you're out of the woods, I suppose. Don't take this webinar as your golden ticket to not look at this. And the other thing that we would never be trying to tell people to avoid paying tax. As Brendan said, there is an opportunity to budget it in to how your business works. If you do want that to run your business in the way that that has it as a certainty, rather than have that risk hanging over you, which can be very stressful for people. We do know that, you know, from a policy perspective, this isn't ideal for our industry. We know that it potentially GPs all put up their prices, and that puts pressure on emergency departments, and you know there's flow-on effects to this as well. So we're not sure if there'll be some overarching policy change, because there doesn't really seem to be any policy around this. It's just all evolving as it goes.
And we're already seeing less and less bulk billing as a result of this. I've got several practices who are, you know, moving away from bulk billing because they just can't afford to run a practice on 30%, and then have this on top of it. We've got a few questions coming in. Keep them coming in. I'm happy to answer. I'm sort of skirting those. I'm happy to jump into a few of those if you want, Sarah.
Yeah, we can do that. Or Dana, do you want to moderate those, or would you like me to do it? One of the questions I saw is does Victoria have an amnesty? The only two states with amnesties are Queensland and South Australia at the moment, and the South Australian one ends this week.
Actually, on that, I see one there. If we apply for the amnesty in South Australia, someone called anonymous attendee, does this mean that you won't have to pay payroll tax for previous years for independent contracting doctors? Yes, that is essentially what that means, as long as they are effectively those independent doctors. If that relevant state authority in South Australia looks at that and decides, well, actually, these guys were employees all along, they weren't even close to being independent contractors, then you might have an issue, yes. But the essence of it is, if they were sort of independent contractors in the way that we've been describing through this, then yes, they would be you would be exempt and they wouldn't be going back. And in fact, I think it's June 25 as well, I think, isn't it, Sarah, in South Australia?
But there's that opportunity then to make the changes that we've talked about in that period of time.
Absolutely. So it buys you a year or so to get things in order, or year and a bit, but also saves you from that previous time as well. There's a question there that I'll jump in on from Prakesh. Thank you for that. Can doctors make a combined trust of all the doctors in the practice where all the payments, a zero balance account, is made to and from that trust? The doctors get the 70% and the rest gets transferred back to the practice trust. This has been looked at. Mr. Dick has verbally, who's a state councillor here, has verbally stated that could be a way to avoid payroll tax. If you asked me 2 weeks ago, 100%, that absolutely was a way to do it. In fact, we run a collection service where we're doing that right now, where we're collecting on behalf of contracting doctors. We are charging the doctors a small fee for that, and we're taking that administrative burden, and that would absolutely avoid you of that. Payroll tax is a lovely thing, and so are state governments, and that all changed about a week ago, and now that's up in the air a little bit. I think it is.
New ruling.
The new ruling that dropped last week put some shade on that, whether it is or isn't. I think it still relevantly is, as long as the contract or that trust of doctors is essentially the doctors itself. The ruling seems to state, and I'd love to see this challenged, they're saying unless the GP is a sole trading GP collecting the money themselves, then you're not excluded from it. But I think if you have the right contracts in place, and then you can show that these are businesses interacting with each other and it's not just the patients of the practice, I think you've got a very good argument to show that. The best result would be for the practices to collect the contracting doctors, to collect their own billings, and then the practice to charge them and they be paid, because that avoids that issue. The service fee can't be an issue because they're not distributing the money to you. The state government also went further, I guess, in regard to that. The state government, I should say, in Queensland And yeah, they're suggesting that unless it's a sole trader, it wouldn't be. But I think that's a bit of a stretch. I don't know how they'd show that, considering they've already said the other ones are excluded because they're not. The payment wasn't going from the practice to the practitioner, so the flow of funds is going the other way. So a roundabout way of answering that is changing. As much as last week it changed. Let's wait and see. I think that is probably the best way to go at this stage. The second best would be have some sort of independent collection service you're using as well. And as a part of that too, there was another part of that question. It's jumped off my screen now. It might have been clicked as answered. Sorry there. I think Dana's jumped on that one too quickly. I think it said, how do we practically do that? There are, I don't know whatever bank they use, but I know the Tyro system, you can, from one POS system, the Tyro can direct to 5, 6, 7, whatever it is, different bank accounts. It's limited in the number, but it can, whereas some of the other payment systems, it would be ridiculous if you had a bank of terminals lined up on the counter. Oh, that's Dr. A, this one Dr. B, this one Dr. C, this one. A Tyro, I know, can direct to different places. I don't necessarily get involved with the administrative side of that, but I know that some Tyro machines can manage that, but it's limited in the number it can do. So that's one possible option there as well. What else have we got there? Dana, have we got some? Or Sarah, what other ones have we got?
Sure. So, anonymous person says, is this due to state governments running out of their reserves? And I think the answer to that is no. I mean, I think state governments are always looking at ways that they can generate revenue. But this is, as we said at the beginning, payroll tax has existed for a long time. And other businesses that were liable to pay payroll tax have done that. And as Brendan said, there's an opportunity for GPs to do that. It was just that the way that general practices engaged with doctors, it was thought that they weren't relevant contracts. And so now we've got more colour around that.
I disagree. I reckon it's a cash grab.
Do you? I think COVID, they spent a lot of money.
Yeah, look, it's the way they've gone about it. They've moved the goalposts. I'm frustrated with the way they've gone about it, but it's probably because I've got a prejudice to hating this actual tax myself.
You do. You have.
I don't want to say it, but when they brought in GST, they were supposed to get rid of these state taxes. Anyway, I'll get a full soapbox.
Yeah, okay. All right. Well, there you go. 2 different answers. Helen says...
Opinions, I should say. Opinions, yeah.
Helen says, we're in Victoria. Is it too late now to change the bank account and billings flow? Is it too late to update the contracts?
Never too late. We'd agree on this one, surely, Sarah.
No,
Absolutely.
it's not too late. And we do know, I got a message from someone today who's going through an audit in Victoria. So New South Wales, they're stopping the audits, but in Victoria, they're still doing them. So the earlier you change the way you're doing things, if that's what your decision is, the better.
And particularly if you think about it, if you change now, sooner rather than later, and 6 months from now, a year from now, you get audited by the OSR as they start getting around to all the medical practices, and they ask to look at what you've got, and you show them, and they go, oh, that's pretty good. I like it. No further questions, Your Honour. They're going to move on because if everything looks tidy and nice and in order. If you wait, kick the can down the road and don't do anything, and then 2 years from now they audit you and it's still exactly the same, they're going to go, oh, there is a problem. Let's go back 5 years and let's get all of it.
Yes. Yeah. Yes. So Gillen says, how am I affected as a contractor? Is it risky to provide services in a practice that still operates like Thomas and Nas does and refuses to change?
Sorry, let me get that one up. I missed that one.
It's in the webinar chat. So there's some questions have come through the chat.
I see 30 odd questions in there. I'm not sorry. Just say that one again. I missed which one you're on.
How am I affected as a contractor?
Oh yeah. Yep.
Is it risky to provide services in a practice that operates like Thomas and Nas and won't change?
As a contractor, I think, depending on what contract you've signed with the practice, but I assume as a contractor, you mean you're the contracting GP.
Yes.
This is a tax that's really the problem of the medical practice, unless you're operating through a company and you bill over, $1 million odd, it's not going to be your major. It's not going to be a concern for you. This is a tax for the employer, let's call it, because they're calling you an employee, or for these contracts. So this will be worn by the practice, but the practice has to pass that on. There's no way a practice can absorb that. They run on, for anyone who's not a practice owner, they run on very skinny margins. Really quick example: if you get $100 in and you give 70 to the contracting doctor, you give 5 to rent, you give probably 12 to 15% to staff. For anyone out doing their maths, you're down to 10% profit, and you haven't started paying electricity, medical consumables, accounting fees. You haven't paid anything else, unless you're getting PIP, PNIP, and pathology. Your practice is struggling to make money on a 30%. So I think for contracting doctors to go, it's not my problem. Not that that person is saying that. I'm not saying you are. Again, I'm on my soapbox here. It's hard to make profit in a practice when you get a 30% margin. It used to be 60-40, and a practice could rightfully make a little bit of money for the risk it undertakes. At 70-30, if that's what you're getting, it's really hard to make a profit, particularly now they're going, hey, here's another 3.5% you're going to have to pay in payroll tax. So no, it's not a contractor problem, it's a practice problem.
It's potentially a practice viability problem, is what I got from what you just said.
Yeah, absolutely. So yeah, things have to change.
Yes. So Prakash says, if your company revenue is below threshold, so you and your husband and company are company directors and employees, you have no issues. Is that right?
Yeah, if that's the practice. If it's a 2-doctor practice, maybe a 3-doctor practice, by the time you add up this, let's call it 70%, 60, 65, whatever, the percentage you take, because obviously they're all different. We're saying 70 here, but that's just based on a number here.
Yeah.
Whatever percentage the doctor's taking, plus the admin, nurses, plus their super, reportable fringe benefits, etc., etc. If that's all under the relevance threshold in your state, not a problem. Don't worry about it. Move on. In a weird way, this gives a competitive advantage to smaller GP practices, which have never had a competitive advantage in their life. So
That's
it's always
true.
There's a positive way to look at these things sometimes. Even though I've come across very negative about this, it's a good way to look at it, that the smaller GP practices, 2 or 3 doctor practices, get a little win out of this, that this probably won't affect them.
Anonymous says, how and where do we apply for the amnesty in South Australia? ATO, no, we've been saying this isn't a federal tax, it's a state revenue office tax. I would suggest that you talk to your accountant and work with them to apply for the for the amnesty if you're in Queensland or if you're in South Australia.
It'll be the OSR or the relevant state body.
Yes,
Please don't just Google it and click on the first link. Just make sure you're going to something that's got a .gov at the end of it.
Yes, yes. Helen says, can the practice be involved in reconciling each bank account for the doctors?
Good question. I think yes, unknown a little bit, but absolutely, because the practice is effectively charging a fee, the 30% in this case fee, to assist with those things. So if they don't have actionable process, yes. If they've got read-only access, I can't see why they wouldn't. I'm only hesitant because these rules change every week, and who knows what they're thinking. But I can't see any reason the practice couldn't have read-only access to the accounts to help you reconcile it, so they know, in their best interest too, how much they can charge you to get their 30%. So yeah, I don't think there's any issue there. Another question as well, just to recap, Queensland does have an amnesty. Tanya, yes, it does.
And the date to apply has been extended to the 10th of November.
Thank you.
Minaj says, what's the threshold for New South Wales? And it's 1.2 million. We'll have the slides linked out. Yeah. And we're also offering a 15-minute free chat with either of us. So we'll send out booking links so that you can book with us if you would like to have a chat. I'm trying to change my, no, questions. Oh my goodness, I've left it on that's all right. So this is my booking link. If you want to book in, you're very welcome to, and I might email you and ask you for your agreement if I need that. Ram says, if I wanted to continue with the old system, how much do I need to increase my fees by to stay afloat? And I think the answer to that is book in with Brendan and have a chat about your profitability, how you're doing things, and yeah, we can't give you exact.
As a guide, I could say 3.5%, but that's really like, this is just shooting from the hip here. That depends on a lot of factors and a lot of things. So absolutely, have a chat to your accountant, or even better, have a chat to me. There's a blatant pitch. Apologies. I think I'll put in a little Calendly link there as well. That Dana, I assume that can be sent out to the group for anyone who wants to. No obligation, same as Sarah's. Just click on. We'll give you 15 minutes, have a bit of a chat. Hopefully, get you on the right track, and you can go from there. It's not a hard sell. I'm happy to talk to anyone.
Absolutely. We'll send you guys all out a copy of these slides and both Sarah and Brendan's links. So if you do want to book in to have more of a chat with them about your specifics, you can.
Lana says, is there any ideas on what's happening with Tasmania?
No, I'm sure I heard a couple of months ago they said they were going to issue something on it, but I don't think anything's come out from Tassie. It due to that 2008 harmonisation of payroll tax. These things will likely flow through to Tasmania, and it'll sort of do it the same way. But there's no amnesty, I believe, in Tasmania yet. But I don't know if they're actively pursuing them either.
The state government body. So in South Australia, to apply, just look up Revenue SA. That's our state revenue office here. And suggested to do it through your accountant rather than randomly Googling. And Ram, you'll get a link for Brendan to book in with him as part of the materials for today's webinar. So maybe I'll pass back to Steph. I see we've got 2 minutes to go.
Have we got through enough questions?
I think we've answered most of the questions. It's been very interactive, everyone. Thank you.
Absolutely. Thank you.
Thank you, Sarah and Brendan, for a wonderful session, very timely and very important. And thanks everyone for joining us. We will, as Dana and Sarah mentioned, distribute the slides as well as the information about how to make those bookings. And thanks again for the TIP group for sponsoring this session. And we'll also provide some information about the TIP group with that email. So I think we will finish at 7 o'clock on the dot. Thanks again to the presenters, and thank you for your time. Have a great night.
Thank you so much, everybody.
Thanks, guys.